right. So, last week, right? We completed the financial statements, right? Completing the income statement, right? The income statement, and we got a profit. We did the statement of equity, which we increased our equity. We did the balance sheet, which we panned out evenly. And then last but not least, we also did the statement of cash flows, which in this case, we also were successful. So last few things that we have to do is going to be to close out our books properly and to complete our post-closing trial balance. Okay. So what I'm going to do here is I'm going to go ahead and close out all of our temporary accounts. Now, how do we close out our temporary accounts? Well, that's pretty straightforward. Our temporary accounts are our revenues and our expenses. And in order to zero each and every single account out, we're going to zero them out into our income summary, and then we're going to zero out our income summary to our equity, okay, since we chose to reinvest into our company. Okay, now first off, let's start off by zeroing out our revenues. So in this case, how would we zero out our revenues?
With sales and income summary.
Right. But okay, good. So since it has a normal credit balance, right? In order to make our accounts reflect as zero, right? We're going to debit all of our sales accounts or all of our revenues accounts. So in this case, right? That's exactly what we're going to do. We're going to go through every single account and close them one at a time. Now, this is the best and most efficient way to do it so you don't make any mistakes. Here is just go ahead and you're going to go to your ledger, look at how much you need to do, journalize it, and then go back to the ledger and zero it out. Okay, we're going to do it simultaneously so then we all are all on the same page. Okay, starting with the first one. Obviously, our main account for sales doesn't have anything in there. It's our main account. So our first account that we have here is going to be our sales for regular coffee. Okay. Since there's a credit balance, right, we need to debit this in order for it to reflect as zero. Okay. Okay, so first thing that we have here is we're going to debit my sales for regular coffee. Right, account number 450, and we're going to debit it for the amount of $13.94.96. Okay, and that's what I'm going to do here. I'm going to go ahead and close it out. General journal. Let's see what page I'm on. I think I'm on 24. Yes, page 24. And we debit it for the $13.94.96. And that should bring my account balance to zero. Okay. So our next account is going to be sales for Supreme Coffee. Account number 4100. Okay, for the amount of $14.36.40. Okay. $14.36.40. And that should bring my account balance to 0. All right, next account we have here is our sales for ceramic coffee mugs. For the amount of $1763.91. Okay. That's exactly what we're going to do. We're going to close this account out for $1763.91. Okay. Then our next one is going to be our sales medium regular coffee. Okay. We're going to debit the account for $52.21.76. Okay. Next we have here is our large regular coffee. Okay. For the total amount of $65.03.25. $65.03.25. Next we have our medium supreme coffee. Okay, which total amount is $66.55.77. Okay. $66.55.77. Bringing my account to 0. Okay. Then we have our sales for the large supreme coffee. for the total amount of $75.24.44. Okay. Then we have sales, returns, and allowances. Since this is a, we have to credit this one. We're going to skip over this one real quick in sales discount. We have delivery income and interest income, nothing. So delivery income first. $48,000 for $300. Okay. And then let's go ahead and plug in those last two accounts here, which is the sales returns and allowances at $45,000. Right, it's a credit. And we're going to credit the account for 1996. Okay. Okay. And then last but not least, we have our sales discount account for $46,000 at a grand total of $1,989. Okay. Okay, 1,989. And that's exactly what I'm going to do. I am going to close this out, General Journal 24. We're going to credit for the 1,989. That's going to bring us 0. Okay. Last account that we need to add here is we're closing everything out to the income summary. Okay. Which is a equity account. All right, equity, right here, income summary is account number 39999. Okay, and now we need to figure out what is going to be the total amount that's going to be in my income summary. Okay, I could do calculations on the side here. So I'm going to go ahead and equal sum my total debits and my credits. So here's my total debits here. Okay. And I'm going to, what's my total amount that's going to be in my income summary?
it 2085?
I did not get that number, but close enough.
Oh, okay. I see how. Okay.
Okay, so basically I added up my total debits to get a total of 3,849, and I subtracted out the 1996 and the 1989, and I should get 28,879.64 on the credit side. So plug that number into your income summary. Okay, close revenues, general journal 24, and we're going to credit the account for the 28879.64. There you go. So right now I have a credit balance. Okay. All right. I can tell you right now. All right. Finish up your description by saying closing out revenues to income summary. Okay. And I can tell you right now, there's definitely not enough space for the next transaction. So go ahead and also draw that line in it so you can prevent fraud. So now that we finish closing out our revenues, right? We got 28,879.64. The last thing that we got to do is now we have to close out all of our expense accounts. And how do we close them out? We're going to credit all of our expenses and we're going to close them out to our income summary. Okay? So in this case, it's going to be an equal sum. Okay? So let's go ahead and go down to our expenses, starting with the very first one, which is your cost of goods sold. So starting from the very beginning, we have cost of goods sold for regular coffee, account number 550. Okay. COGS, regular coffee. And we're going to credit this account for 1407.68. 1407.68. And that's what exactly what we're going to do here. We're going to close out General Journal 25 now because we're on a new page for the 1407.68. And that should bring your account balance down to 0. 1407.68. Okay. Next account here is cost of goods sold for the Supreme coffee. Okay. For the total amount of $1488.55. Close General Journal. 25 for the 1488.55. Bringing your account balance down to 0. Okay. Next account we have is the cost of goods sold for the ceramic coffee mugs. Okay. For the total amount of $1183.84. Bringing your account down to 0 at 1183.84. All right. Next is cost of materials. So first one we have here is cost of materials for the medium coffee cups. Okay, account number 51200 for the total amount of 28670. 28670. $28670. Bringing my account down to 0. Okay. Next one is the cost of materials for the large cups. For the total amount of $351.63. 351.63. There you go. Count back down to 0. All right, next we have is cost of materials for sugar. Okay. For the total amount of $43.20. Okay. Last but not least, I have cost of materials for creamer. For the total amount of $359.26. 359.26. $359.26. And that's all the cost of goods sold section right there. Okay. Now, what you can do is you can equal sum and then do a separate journal for more expenses. But in this case, it's all going to go into the same account. So I'm going to go ahead and connect them by also closing out all my operating expenses as well. So going down the list, we have our first one, operating expense, $60,000 for advertising expense. For a total of 185 even. Okay. And that should bring your account to 0. Okay. Our next account is 6,100 for bank fees. For a total of 268 and 30 cents. 268.30. $268.30. Next, we have our business expenses for the 6,200. For the amount of $1282.78. $1282.78. $1282.78, and that should bring your account to 0. Next account we have is freight expense, but freight expense already is zeroed out, so nothing we have to do there. Okay. Next we have is insurance expense. For the total amount of $195.83. Okay. Next account we have here is our interest expense. For a total of $101.34. bring the count down to 0. Next is labor expense, which we have nothing in, but we have subcontractor expense and temporary labor expense. Okay, so starting with the first one. $65.10 for the amount of $18.90. Okay. And then we have the temporary labor expense. For the total amount of $252 even. And then we can go ahead and clear that out for the $252. Okay. Next account we have next is license and permit expense. For the total amount of $375. Okay. And then we have loss on disposal of asset. Account number 6700 for the total amount of $2,000. Okay. $2,000. Next is we have office supplies expense. Account number 6750 for the total of $70. Okay. Next we have is payroll expense. It's just there's nothing there, but we have salaries and wages expense. Okay, 6810 for a total of $884. Next we have his commissions expense. Okay. For a total of $411.96. Okay. 411.96. And then let's see what's next. We got payroll tax expense. For a total of $97.98. Oh, okay, my bad. I have a typo. There we go, 97.98. Right. Next is purchase expense, which is zeroed out. We have purchase returns and allowance, which is zeroed out. Purchase discounts, nothing there. Then we have rent expense. Okay, account number 62,000 for a total of $1,500. Okay. Last few accounts here. So travel expenses, nothing there. Utilities, nothing there. Now the bad debt expense. Yep. We gotta clear that out too. Bad debt expense. $65,000 for the total amount of 76.60. Okay. Okay. Then we have depreciation expense. Okay. 66,000 for a total of $625.95. Sorry about that. Right down to zero. Okay. And then our very last account in our expenses is the amortization expense. for $11.67. And I'm going to go ahead and wrap this up by saying closing out expenses to income summary. Okay. So I'm going to go ahead and close this out. Okay. So now I closed out all of my expenses. What is my grand total amount that I need to put into my income summary? What was my total amount in expenses?
15,349.27.
Okay, let's see. Equals sum. Okay, let me see. 15,349.27. Okay. So let's go ahead and plug that in. For the 15,349.27. Okay. Leaves us with 13,530.37. And where do we see this number? Right? This number should come from your income statement. Let's see, is it 13? 13, 530, 530.37, 13, 530.37. So that means we ensured that our numbers are matching up 100%. So here, the income summary should equal whatever number that you solved in your income statement. So in this case, I have 13, 530.37, which is correct. Okay. Now, of course, to wrap up the rest of this, right, we need to now close out our income summary to our equity because we reinvested the money into our equity. Okay, so I'm going to go ahead and, so taking a look at this, right? How do I zero out my income summary? I currently have a credit balance, so therefore I need to debit my account, right? And then my equal and opposite credit is going to be to the owner's equity. So for the 13,530.27, I'm sorry, 37. Okay, so 13,530.37. Okay, and I'm going to credit that to my owner's equity. And I'm going to go ahead and make a note to say that we are closing out to equity. So, since I'm already in my ledger, I'm going to go ahead and close to equity, which I'm going to debit my account for 13,530.37, and that should bring my account to 0, right? And now I'm going to add my profits by 13,530.37. Which should increase it to 43,530.37. Okay. Last thing I need to do is I also need to zero out or close out my owner's withdrawal because that affects my equity as well. So I need to zero out my owner's withdrawal. Okay, in this case, I have a debit balance in my owner's withdrawal. So therefore, I need to credit my owner's withdrawal, and therefore, I need to debit my owner's equity. Okay. Which is 32,000, and I need to zero it out for a total of $3,000. Then last note here is that I am going to close out to equity. Okay. So let's go ahead and complete that. Okay, so 0 for my owner's withdrawal. And last but not least, I'm going to go ahead and close out to my owner's equity account. I'm going to debit my account for $3,000. So therefore, my account balance should be now $40,530.37. And where do we see this? Should match your statement of equity because that's what we did, right? We put in the profit, reinvested the money, and we also updated the amount that we withdrew. So therefore, now my owner's equity account matches my statement of owner's equity, which is the 40,530.37, right? So that means everything we did so far is correct. And now I'm just going to go ahead and close out my journal because that's the last journal for this entire scenario, right? We are done, right? And then I'm going to go ahead and write right here. Whoops. Okay, should be font is I'm going to change this to white. And this is going to say closed books. Okay. All right, save. So that means the last thing that we have to do is now do our post-closing trial balance. Now in this case, since my post-closing trial balance, right, we solved what profit was. We closed out all of our income and our owner's withdrawal, and we figured out that my equity is going to be for $40,530 and 37. So what I'm going to do is this is going to be exactly identical to my balance sheet, right? Because here I'm going to list out all of my debits, all of my credits, which is going to be essentially all of your assets and all of your liabilities, because equity, right? We already got rid of all of our revenues and our expenses. We zeroed them all out. So at the end of the day, in this case, my post-closing trial balance is going to be more or less the same thing as my balance sheet. So what I'm going to do here is I'm going to reformat my balance sheet, okay? So I deleted my post-closing trial balance, and I'm going to make a copy, right? Make copy. I'm going to put it right here, okay? So there it is, balance sheet number 2, but I'm going to change that and make it say post-closing trial balance, okay? I'm going to reformat it, right, because there's a few things I have to do, right? This isn't the balance sheet, this is post-closing trial balance, okay? As of June 30th, 2020. So again, now all I have to do is just change the headings, right? This is supposed to be debit, and this is supposed to be credit, okay? And then, of course, instead of having total assets, I'm going to get rid of this right here, okay? I'm going to get rid of total liabilities, okay? And I'm going to go ahead and get rid of the total liabilities and equity, okay? So then therefore, I'm going to redo my formula, because my formula should now be my total debits, okay? And then this side is also going to be my total credits, which in this case, 111.85, and that's it, right? Because now, like I've mentioned before, right, since my equity is the 45, 30, 37, right? I closed out all my revenues and my expenses, so I don't have any debits or credits there. So all I have left is just my assets and my liabilities, and this should look like this. It's going to be the same as your balance sheet. All right? And that concludes the entire coffee cafe. Any questions at all?